Good morning. This is Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, July 30th. Well, a sea of red here across the agricultural space this morning with prices lower across the board. Corn right now is about 5 to 6 lower on or very near session lows. Soybean prices backed up another 14 to 18 cents. Spreads are recovering a little bit, however, with inside trade. Oil is down about 30 to 60, while meal prices did back up about another $5 to $6 a ton. New contract lows overnight in Kansas City wheat. Currently, prices here are down about 16 to 17. Chicago and Minneapolis both running about 12 to 14 cents lower. Speculative traders were light buyers in feed grains yesterday with open interest moving up while being net sellers in the soybean complex. Open interest here was down 7 to 11,000 contracts. Speculative traders do remain heavily short in corn and in beans while still holding a modest long position in the meal. Good rain Sunday night and yesterday across eastern Iowa through much of Illinois yesterday. These rains also brought some scattered heavy totals to southern Illinois and Indiana later on, as well as southwest Ohio. Good rains for Michigan the past 24 hours as well. Yield prospects remain high for much of the central and eastern corn belts. Rains here are rains have been much more scattered in the western corn belt with extreme heat this week, generating some moisture loss and likely uptick in drought ratings later this week. Rains over the next 5 to 7 days will continue to favor the central and north central, Midwest, and eastern corn belts. Crop ratings yesterday after the close, I think, were generally in line with expectations. We did see corn conditions recover 1% to 68% good to excellent. Expectations were for about a 1% drop. 77% of the crop is silking, 30% of it is in the dough stage, and that is just above both year ago and the 5-year average. Crop progress in the northwestern belt continues to remain about a week behind its historical average. I believe current conditions would suggest an average national yield of 183.5. That's above the USDA forecast in July at 181 bushels an acre. If we cut acres about 500,000, which is what I expect here for the August report, production would come in at that 183.5 yield at a 15.225 billion bushels, at about 100 million below last year's record crop. I did find 3 states reporting harvest already: Texas 27%, Louisiana 3%, Mississippi 1%. Bean conditions did slip 1% to 67%, good to excellent. Still the highest rated crop since 2020. 77% of it, the crop is blooming. It's 44% setting pods. I lean towards a bean yield of 53.5 bushels an acre versus USDA 52. Winter wheat harvest is slowed, advancing another only 6% this past week to 82% complete. However, that does remain above both year ago and the 5-year average. Spring wheat conditions dipped 3% to 74%, good to excellent. A slightly bigger drop than expected, however, still the best, highest rated crop since 2018. Corn prices just remained stuck in a 390, 410 range for spot SEP, roughly 405, 425 for Dees. Still looking for some better export demand to spark more of a short covering rally. And right now, the widening of the spreads do not offer a whole lot of encouragement right now. Inside trade beans overnight, crush margins did firm yesterday on the price weakness with board margins approaching the $2 a level, $2 per bushel level. That would be a 4-week high. Prices continue to seek out a level to stimulate better new crop demand. New contract lows overnight, as I mentioned in the KC wheat. Prices here have fallen to about a 3.5-year low. So lower across the board overnight. We'll see if we can hold some of these key support levels just below the current price levels and hopefully generate some sort of price recovery. Thanks for listening, everyone. I hope you have a wonderful day.